Hi everyone, hope you're doing well. Today I'm doing a video for you guys on what my number one stock for 2025 is. So this is a stock that I have the most conviction in, that will do the best in 2025. I've done this for the last few years and the last few picks have worked out very well, and it's actually become quite a popular video series to do on my channel. So what I'll do today is I'll go through that stock. I hope you enjoy it. Hit the like button. If you're new around here, subscribe. We're near 17,000 subscribers, and when we get there I'll do a live Q&A as well. Apart from that, let's get started. So here we go, we are going into 2025 now. 2024 was a fantastic year for me in the stock market. Can we do it again in 2025? We'll see. For it to be successful, my picks have to be, once again, very good picks to lead me on to perform. And if we look at what my stock was last year, stock last year was PayPal. PayPal is set for a mega 2024. And it happened. PayPal was up 43% this year, or last year I guess you could say, and it was outperforming the S&P massively. In 2023 we did the same again, and it was DraftKings. DraftKings had a pretty good year, and as you can see from where the stock went from 23 into 2024, we had nearly 200% return on DraftKings. So both of these stocks in the last 2 years have performed very well. So here is my stock for this year. This is my number one stock for 2025. It's a stock I own and I am now very much aggressively buying it. And it is Evolution AB. Evolution AB is a stock that is my number one stock for 2025. I'm not going to lie, it was very close to being AMD. If you wanted to know one of the new stocks I've been buying in the portfolio, there's a little bit of a hint for you. It was close to being AMD, but I have decided to go with Evolution AB. I think it just had the edge on AMD, and I'll go through those reasons why. Now, one of the reasons I like picking up some of these stocks when they're falling off a cliff is, if you look at PayPal, for example, a stock that was just absolutely hated for the last 2 years, and eventually it came a really good opportunity to buy that. DraftKings, same again, it was a stock that was just hated for the last year, 2 years. It fell to stupid low levels. Sometimes when all this negativity is around the stock, nobody wants to own the stock, everyone hates everything that's going on with the stock, it comes a pretty good buying opportunity. I'm seeing exactly the same with Evolution. If you look at this stock here, when it was in 2021, it reached its peaks, and really for the last kind of couple of years it's traded a bit sideways, especially though in 2024 the stock fell off massively. As you can see here, year to date is down 31%, massively underperforming the S&P 500. And I feel like this negativity, especially this year, has finally pushed Evolution to levels where you're like, it just doesn't make sense now. It's just way too cheap. 13 times earnings, it's a 3.7% dividend yield. Let's round it up, let's call it a 4% dividend yield. So you're getting a nice dividend as well with this stock. So for dividend investors, it also applies to you. Now it is on the Swedish stock market, but you can go buy this as a dual listing. It is also on the US on the over-the-counters markets. That's the one that I buy through Trading 212. But if you want the Swedish exchange, there you go. Actually, I'm going to skip past the financials. I'm going to come back to it. Let's start as a bit of a background here. So Evolution, what do they do? So they do live casinos, live games, first person and slots, as you can see here. Now, what this enables the company to do is they are able to build these studios and do these live casinos. So for example, if you went on one of their partners here, like DraftKings, like FanDuel, William Hill 88, if you went onto the casino part of their platform, you'll see they run live casinos, through the actual website. Now for these guys, it's too much hassle for them to build the studios, to hire the people to run the games. So what they do is they go to someone like these guys, and what they'll do is they'll do all the live casinos for them, and what they do is they take a cut. So it's a bit of a picks and shovels play. What happens is these guys do all the getting the customers, all the heavy recruitment, the platform, and what happens is Evolution just take a nice little cut for running all these live casinos for them, which is really nice. They don't have to handle all the promotion side of it, all the competitive element side of it. Now, if you look at the breakdown of the company, they're quite diverse. So they've got Europe here, which is the second biggest behind Asia. Asia's growing rapidly, as you can see here. Europe's still growing at pretty good rates. So you got the likes of the Czech Republic coming online. You got North America, which is potentially going to be the biggest market area for them in the next 10 years. So that's an area to massively watch. Latin America also has, or LATAM, has also the potential to come, once again, another big area for them. So these are going to be two big growth drivers for them going forward. If you look at historically how low this is, so we're currently down around about a 12 times earnings, 13 times earnings. So on a forward basis, I think this is around about 10 times earnings now. And it did at one point go up to 78 times earnings, but obviously that's during the CV times. Everything went a little bit crazy then. Before the CV times, this was around about a 35 times earnings business. Historically, it's traded around about 35, 40 times earnings, so it's half the valuation of what it has historically been as well, which is screaming out to me to be a very interesting opportunity. As we see here, US is set to become the world's largest regulated iGaming space. So we talked about how much potential there is here for this part of the business to come even bigger. And we know that from the likes of DraftKings, if any of you guys have ever followed me talk about DraftKings before. And you can see here in 2023 to 2024, the iGaming market was predicted to go to 21% growth. So we are still seeing major amounts of growth in that US iGaming, as you can see here. Now, the big thing is if we get the states online. So at the moment, a lot of US states have allowed sports betting, but iGaming separate. Now at the moment, it's been a little bit harder to get these states to allow iGaming. I think they eventually will. It's been hard to get them across the line, but there's a point where eventually all these states, like New York, for example, as you can see here, are going to have to allow iGaming because they're going to make that much, they're already seeing the money they're making from sports betting tax. Eventually they're going to, money talks, and eventually they'll turn around and they'll go, we got to allow a lot of these iGaming states to come online because we have to make so much tax from it. We need to fund the money somehow for all these projects. So even though there's been a little bit less support for iGaming compared to what has been for sports betting, eventually I think they'll blink and they will start allowing a lot more iGaming because they're just losing out so much money on taxes, and then obviously Evolution will do very well from that point of view. Latin America is also a very exciting opportunity, like we just said a little bit earlier, because of the Brazil expansion as well and other areas as well that's currently going on. But even without that at the moment, the company's still doing very well. I showed you really briefly the financials, and if we do go back to the financials, so they just reported the recent earnings, and revenue was up 27% in the third quarter, as you can see here, whereas the total operating revenues were 20% from the full year, so still very good amounts of growth. EBITDA was up 30%, as you can see here as well. So all the numbers are moving in the right direction, which we want to see as well from the business. It's not like these numbers have been poor from the business as well. They're still delivering on very good numbers. And as we zoom out here on the past performance, you can see here that the profit and revenue has just continued to go in the right direction, and that is correct. They do have 55% profit margins at the moment, which is just absolutely crazy. If we look at the future growth, the growth is only expected to continue slightly lower than what they've previously done. I'll give you that one, but it's still going to be very good rates of growth as we see here going forward. Balance sheet wise, as you expect, the company is able to have an amazing balance sheet. There's no debt on there. They do pay that 4% dividend yield as well. Now you would say that, okay, you've got a company firing on all cylinders, the share price is slumped, why are insiders not buying? Well, there have been. The problem is the share price on this stock has kind of been slumped for so long that I think insiders all started buying a long time ago. I think they all started buying back in the 2023 dip. And they all started buying during that time frame, and then the share price still hasn't rallied up. Well, it did slightly, and then it's giving it all back since really about March time, and giving it all back. And I think they kind of go, well, we can't buy any more shares because we bought a ton 12 months ago. So for an example of that is that, as you can see here on the 20th of November 2023, so we're just over 12 months ago, the CEO, as you can see here, did buy 99,000 worth of shares, as you can see here, or around about £9 million worth of shares. So the insiders are buying shares, but the problem is they bought so long ago now on the last dip that I think they're kind of like, we can't really buy anymore. So yeah, you have kind of got the insider buying going on there. Like I said, amazing profit margins. They are also buying back shares, which is really nice to see. You probably look at the stock now and you're thinking, Jacob, so why is the stock down? Because the stock's down. It's at historic low valuation. It pays a lovely dividend. It's buying back shares, insider buying going on. Growth, profit-wise, revenue-wise, all going up in the right direction. What's wrong with this stock? And I generally don't know, because I look at this stock and I thought eventually what will happen is the market knows something we don't, and it will come to the public's attention eventually, or the public market's eyes eventually, and we'll be like, oh, so that's why the stock's been, slumped down for the last 2 or 3 years, but the financials continue to deliver, the balance sheet gets stronger, there's more shares being bought. Eventually we'll realise why the share price has been going down for so long, and it just doesn't seem to happen. You think there's something that's going to come out, and it still hasn't come out, which doesn't make sense. And I think it'll be this earnings report, it'll be the next earnings report, but it doesn't happen. And as we've seen so far, the financials just only continue to deliver, and it doesn't make sense, because what should happen in the stock market is that If you have a business that financially delivers, which is what's happened with Evolution in the past few years, the revenue has grown massively, the profit has grown massively, you should have that reflected on the share price of your stock. And what we have right now is we have the disconnect where it just hasn't been rewarded. For the last few years, the share price just has not been rewarded with the revenue and profit growth, and that doesn't make sense. That cannot happen forever, and eventually the market will realize and start buying up this stock. We've seen that plenty of times before where fear just takes it too low and you're like, it just doesn't make sense, and then you snap with your fingers, the stock bounces back. And this is why eventually I had to put this one on the list, because the valuation just doesn't make sense to me. I think the stock should be probably double the share price where it is right now without even factoring any future growth in. Now, obviously, there's the concerns around competition when you are a company growing at these sort of rates and the profit going up that much. I guess the factors of competition will come in and try eat some of that profitability that you do have. I guess that's kind of a concern here. I guess the other thing would be around regulation, if any of the iGaming states do come online, I guess, but there's still plenty of areas for the company to grow in. I guess the last one, which is actually quite a recent one, which actually did the other day, actually pushed the stock down a little bit further than where it has been. So we did have a bit of a drop off in the last week by another 10%, and that did come off some news with the UK markets, and basically they have come under an investigation by the UK Gambling Commission, who said that they have been allowing other companies to use their platform who don't have a UK GC license. So there's probably something in this. There could be no action taken. They could get a fine. They could lose the license. Worst case scenario. I think realistically they'll get a little bit of a fine and say, manage this a little bit better. Realistically, let's go worst case scenario. Let's say they do lose the license. Well, the thing is that the UK only makes up 3% of the revenue. So when you're only making up 3% of the revenue out of 2 billion. That's not really that much of an issue. I mean, obviously you don't want it to happen, but there's worse things to happen. So it'd be like, yeah, but within a month's time, I'm sure the growth in other areas would make up for the loss. But we don't want that to happen. But if we think worst case scenario, it's not going to have that much of an impact. And that's worst case scenario. Like I said, I think realistically they could get a fine, but realistically they might even not have any issue at all with it. They might just say, just do a bit better job. That's what might happen. But yeah, overall, like that's the worst thing to happen with this stock, and that only came out a week ago. So even with that one issue there, I still don't think this stock should be down at these sort of levels. And let's have some look at some numbers on here on Evolution. So I've got 5, 10, 15% revenue growth in. I think realistically this company could grow even faster. I think we could see 20% revenue growth for this business. Profit margins of 55%, 57% and 58%, and on an earnings multiple, 20 times earnings. Now, this is the crazy thing. It's not often that on the worst case scenario, it's not often I actually have 90% upside. It's normally a lot lower than that. So that's really positive. Mid side, over 100% upside, which is what we like to invest in. And on the high side, nearly 200% upside, which is really good. Now, like I said, this is at 20 times earnings. I think this company is a premium company. I think this company should probably trade at like 30 times earnings. If you're doing the numbers that I've put in here, I believe a company like this should probably trade at like 30 times earnings. And on that side of it there, you got loads of upside. I'm just going to correct that. So yeah, and 200% on the low side, which is just, I don't think I've ever seen that before. 250% on the mid side and 300% on the high side. That's just absolutely insane. And like I said, I think that potentially we could talk about revenue growth wise. I think this company could even hit 20% if more states come online. That's really good amounts of upside. Yeah, I mean, like I said, it's not often that I have a stock where I argue the case that it's already 100% undervalued without even factoring any growth in. Like today, this stock should be double the share price. And then you factor the growth in, and we're talking about potentially a stock being 200, 300, 4% upside. Yeah, it just doesn't make sense. So with this stock, yeah, there's a few little issues going on, but I cannot find anything to justify the value that it's at right now. It just does not make sense at all. So yeah, I'm a big fan of this one right now, and this is my number one pick for 2025. I think this stock should do very well. So hope you enjoyed it. Hit the like button. I'll see you in a bit.